Hey, what's up, everybody? Hopefully, everybody's having a great week so far. Today's Wednesday, and we're gonna do like a mid-cap recap type of thing right here with the futures today, and just kind of talk about what's gonna happen and what are things that we're gonna be looking for the next couple of days, right? I have in mind a couple things that we can talk about, and a few tickers that you guys can potentially build upon, and then also get some day trades in between, right? So let's get started. So, anyways, let's look at the forward/ES. Let's look at the market, see where it's doing, what it's creating, what is the potential, what can be created. I guess the biggest question today is: are we going to get a rug pull, or are we going to hit all-time highs? Right? We're not far off, guys. Like legit. This is literally from 46 to about 48. Okay, that is not a lot. That can be done with about 1 to 2 candles. As you guys can see, that the previous 2 weeks have been solid green, right? So we went from what is this 45.35 from the 41.30. So that's a pretty big move. Okay. One thing I do want you guys to recognize is the fact that we had these amazing bullish candles, and it took out, let's count them, right? 1, 2, 3, 4, 5, 6, 7 weekly candles, guys. Okay. So we legit in 2 weeks took out 7 weekly bearish candles. All right. What that means here is that even with all the news going on, with all the chaotic Ukraine and Russia, the chaotic oil, the VIX going crazy, the interest rates, the inflation, all this stuff, right? All this stuff going on in the world within 2 weeks, guys. Okay, we took out 7 weekly candles. Think about that for a second. All right. So now, what I want you guys to see is the bigger picture. Everybody's talking about that we were in bear territory, and that's when all the news started coming out right here. You know, we're in bearish territory. The world's falling apart. You know, things are going to get worse in Ukraine. They're going to shoot nuclear missiles, and oh wait, by the way, inflation is going higher. Interest rates are going to come up, and then all this stuff started happening here. Okay, what I want you guys to realize is that all that news got priced in already. So on the downfall from the first 3 months of the year, we've been downtrending, and everything just got priced in. Okay, regardless of what you guys say, regardless of how bearish you guys may be, take a look at what it really is and how it's really moving, and you guys will see that the being priced in is the number one thing. Results confirmation from these 2 bullish candles that are engulfing these 7 weekly candle bodies. Okay, now we're at the top of the wicks. So any bears that would have showed up, they would have shown up here. Okay, those are the wicks, those are the sellers. That's when the bears started taking full control of that downtrend and continue that downtrend for the 7 weeks. All right, that's what I want you guys to see. Again, regardless of the news, regardless of how everything may seem, the bulls are stepping in and the price action is reacting, and it's basically moving forward. So what you see here, boom, pullback. Here's your run up. Here's your pullback. Here's your run up. And then this is where we stall. We create a little supply. And then that's when all the news hits. The world is falling apart. The world is crashing. The market is going to go back to zero. And next thing you know, while everybody's still loading up, we're just moving healthy. Okay. So bigger picture, guys, the move is still here as a nice bullish play. So either way, we still got to be cautious. We still got to be aware of what's going on in the markets. All right. Now I can show you guys tons of tickers that are, plenty of room to the upside, right? For example, Facebook. This thing gave up so many gains, and then now it's finally reversing. Imagine if you guys were to only focus on Facebook alone and continue trading the rest of the year. This is the one that's going to give you the more reward versus risk, because your risk is legit like down here versus your reward being this high in the next, by the full trading year that you're going to have. Now, I'm not sitting here saying that Facebook is going to come back and test its all-time highs by the end of the year, right? I'm not telling you to start loading up on leaps because it's going to be here by, by December. But what I want to point out is the reward that this has, okay? The fact that this company is still great, okay, and even though they lost a lot of revenue, okay, I get it, but it's a social media app, and social media comes and goes. Social media will always be here no matter what. It's always going to be used, okay? So I don't know what else they do, but that's up to you guys to make your own research and do your own research and understand what the company is all about. In this case, what I'm showing you guys is the potential reversal in some of these tickers, all right? There's a lot of tickers that are like this, and one sector in particular that, is showing some type of reversal signs. So I want to point out this because it makes more sense to understand like where we're at in the market, okay? Some of you guys are wondering like, well, we shouldn't have bounced, or, we should keep trending down, or this is just a pullback for the bears to get in, and we're going to come trending back down. Okay, I get it. You're making all these excuses. But in reality, there's a lot of tickers that have and hold value at these lower levels. Okay, so if you take a look at all of ARK, right? I'm gonna start with Roku. Look at that bottom that it's in. I'll start with ZM, even though I personally don't like ZM, and I think it's not something to be trading, but it definitely can, provide a lot of money. You look at this ticker, TDOC. You look for TWLO. CRWD, you look for U, look for SQ, PayPal, Netflix, look at Netflix. So many tickers out there, Disney. Like I'm saying, guys, like I'm pointing out things that make sense, okay? TSM way down here on the weekly level. And there's a lot of buying, okay? So no matter what you guys think, there's always going to be buying in the market, okay? And that's what pushes the market to go up, okay? Even though you guys may think that, there's inflation and, all this stuff, all these bearish conversations out there in the world, my question is, who are you really listening to? Are you listening to what the social media is saying? Are you listening to, somebody that's going to tell you to load up on puts because the world is crashing, because of inflation, because of interest rates, because everything's just going bad, because Ukraine's getting bombed by Russia with nuclear weapons, and they're not gonna have peace and all this stuff? Like, what is it that you're listening to, right? Are you listening to all that stuff that's not gonna move the resistance or support, or are you literally looking at these charts for the break above or the break below? That's my question to you guys, okay? I'm not saying to ignore it. All right, that's number one. Do not ignore what we're currently in the state that we're in, but understand that there's still a lot of more value in the market in itself for these tickers to get bought up and push higher. Even though there's some tickers that are pulling back right now, and some tickers are retesting. Like, look at Amazon, right? Amazon's about to have a split. Google is about to have a split pretty soon. Let me show you another strong ticker. Look at Apple. Did this get even affected by all that stuff that was going on? Why was Apple not affected? Look at this thing. We're about to hit an all-time high. Okay, we're shy from it. We're only a few bucks away from 183. And still, people are saying that the world is crashing. Okay, let me show you another ticker, ABBV. How come this one didn't drop down? Have you guys seen UNH? Have you guys seen CVS? There's a lot of tickers out there, guys, that are holding up the market regardless of what's going on. There are sectors that, get affected in certain ways, and that's okay, because what it's doing, it's offering you guys so many opportunities to actually dip buy and actually invest in something, because what it is when everybody is in fear, that is the best time to start loading up on positions. But yet some of you still are wondering and scared and cautiously in the market, not wanting to buy something that makes sense. Okay, 5 years from now, where is PayPal going to be? 5 years from now, where is Facebook going to be? 5 years from now, where is Netflix, Roku, ZM, TDOC? Where is ARK going to be 5 years from now? Okay, that's what you guys got to ask yourselves when it comes to investments. See the future versus trying to sit here and say, Russia and Ukraine are still at war, so it's affecting everything, or China is still on lockdown and it's affecting the chip manufacturing companies and all this stuff. In reality, guys, look at the value that we're in. Look at the state of the markets, okay? There's a lot of buying pressure. There's still pullbacks. There's aggressive sell-offs, and there's some good opportunities in the market to properly day trade, not only day trade, but also invest into something, okay? So pointing that out, making a note for you guys, don't panic. Everything's okay, all right? We're gonna follow the trend until that changes. Now, here's my question to you guys. How are you going to identify where the trend is going to change? Because technically what we did is we just knocked out 7 weekly candles, like I said, all right? And we're still green this week, even though with the pullback today we experienced, we finally had a red day. Look at the weekly candle, it's still green, okay? It's still green. What I want you guys to be aware of is the potential pattern that can be built here, okay? Let me just show you guys. I don't have to tell you guys exactly what this is, okay? But just so you're aware that the potential of a pattern that's going to be built. Now, this doesn't mean that it's going to go bearish. It doesn't mean that, the world's going to crash and inflation is kicking in and, now the interest rates are hurting every stock in the market and, get out of your positions because, it's going to go back down to zero, okay? None of that. What I'm doing is I'm being a little more technical about some things and looking into the potential of something that may happen. It doesn't have to happen this way because next week we can legit have the strongest bullish candle engulfing and we're at all-time highs and we can be at 5K, okay? This could potentially happen, all right? It doesn't mean that I'm calling out a head and shoulders, but be aware that something can happen that way. But also be aware that we can blast through this all-time high and come retested in the next couple of weeks. Be aware, okay? Like I said, there's still a lot of buying pressure in the market. There's still stocks that are being bought up at these lower levels, which is creating the market to go green. Number one thing that I know that the buyers are still here. Remember the last video that I made here on the characteristics here for the VIX? We did talk about this and I told you guys that there's something going on right here. So the characteristics are changing here. And that was when we were able to call the bottom in the markets. So I gave you guys a heads up as to what to look for. So now number one thing that you're going to look for is for the continuation of a downtrend for the VIX. Every time we have a red day, make sure you guys look at the VIX. That's number one, okay? The VIX has to stay red, has to stay below these levels and continue on down, all right? Technically right now, there is no fear in the market. So there's still a lot of buying. There's still buying pressure. So the selling pressure is not heavy. There is aggressive pullbacks. There is retest of patterns, but in reality, there is no selling pressure just yet, okay? All right, so this is number one. Make sure you look at the VIX, all right? Number two, you want to look at gold. Gold, again, is a safe asset. And we talked about last time. We talked about the war catalyst when this happened and then this happened. And then the bottom of the market got called out and now we're pushing green. So the same thing here goes for gold. We want to look for this to kind of just slowly die off and not build any momentum. We don't want that momentum because if we do get some momentum, it just means that more people are loading up on safer assets versus trying to get into their positions long-term in the stock market. That's what that is. So make sure you guys set some alerts, right? Come on here, set the alert, just set it at a random spot so you're aware that if this does push up, you're going to realize that, oh man, like there's somebody buying in gold. This is what we talked about. But again, there's no momentum in gold. So all it's doing is just trending normally. There's nothing wrong about the normal trend, okay? So we're going to look for that number two, all right? The next thing we're going to look for is ES on the 4-hour. And we're looking for that staircase pattern to actually hold, okay? This staircase pattern is very nice. Like I said, the volume is steady. Most of you guys are saying that the volume is low, the volume has decreased. Let me tell you guys something about volume. When there's volatility, that means that there's a multiple of people buying and selling. When there's normal volume, low volume, it means that there is one trend in itself. meaning that we're still trending on up, okay? The volatility is created by both buyers and sellers at the same time with multiple positions, multiple people coming in. So of course, the volume is gonna look more aggressive. And there's going to be a lot more fear. There's going to be a lot more pump. It's going to go up, down, and it's going to, basically ruin some accounts over there because some people are going to get stopped out. Some people are going to get in the wrong positions. Some people are going to oversize. And that's what stops out a lot of people. But that's what creates a lot of volume because it creates stop losses. It creates market makers coming in and taking your money because you're not managing your risk properly. You're going over the fences because you see some crazy volume, right? So that's what creates in the market. So now that we have some low volume on a nice trend up, what this is doing, it's giving you normal buying volume. The buying because people, the bulls are the ones who are in control right now. So every time that there's a red candle, the bulls are still coming in. And you guys tell me that today there was some relatively low volume, but the volume, even though it created a red candle, look what it actually created. That is a buyer's wick. Okay, look at this. Look how many buyers showed up. So even with the trend down, even with the crazy volume, you guys answer this question. Who was present here the most? Was it sellers or was it buyers? That's what you got to ask yourself. That's what you have to answer. That's what you have to understand. Because the market in general, like I said, just because we experience pullbacks and because it looks like we're trading in low volume, technically it's not a big issue, okay? It becomes a bigger issue when there's huge volume and there's aggressive volume where both buyers and sellers, that's going to stop you out both sides of whatever position you're in, okay? But again, that creates some high IV and it creates high percentages and then people are so excited, but other people are blowing up accounts. It's reality, guys, all right? So what this is here now, right? Let's go check it out. Look at this piece right here. We're retesting this old double top from the top. And look at what happened. I just want to show you guys a piece of what happened. Here you go. Does it have to be perfect? Does it have to be on the dot? By no means. But look at that, okay? I want to show you guys exactly what you're getting yourselves into because some of you are probably screaming that it's going to be bearish, right? Day by day, guys. If we hold steady up here, what we're actually doing is we're building a new demand. Okay, what you want to see here now is you want this to go sideways. You need some sideways action. Okay, some of you guys are going to call it chop. Some of you guys are going to say no direction. Some of you guys are going to be getting into puts. Some of you guys are going to probably get stopped out of your positions. That's naturally what's going to happen in this area because you're not going to understand what's truly happening on the bigger picture. I just broke down this market for you. I told you exactly what to look for, what can potentially happen, and where we may be potentially in the next couple of weeks. Take it with a grain of salt, do whatever you want with this information, but this is what the charts are saying, and this is what they're developing. As that stuff develops, I will personally continue to be buying dips. I will continue to be buying shares, and I will continue to load up on my positions as much as potentially that I can and try to get those red candles as entry points because that is the sentiment and the value that this market is providing, which is a bullish sentiment. Until that changes, guys, I don't think there's going to be any crazy rug pull, but be aware that that rug pull that everybody's talking about that is expecting can come at any moment. At that point, everything that I said basically stays valid, but all you got to do is switch sides automatically and be able to adjust with the market properly without questioning your stop loss. Get out of your position if you're in calls. Go light in your position if you're in calls. Hold with longer expirations, but get in some of those put plays and write it all the way back down. Okay, very simple. Okay, sometimes it doesn't take overthinking. You just got to make sure that you execute and adjust right away. Okay, so set the alerts. Okay, 45.50, anything below 45.50 will probably start trending down to this 45. Okay, that's it. Other than that, I really don't care. I will continue buying dips and I will continue to follow this trend that is very healthy. And we just took out, like I said, all this. We took out all this volatility in 2 weeks, guys. I want you guys to realize that. That's very, very important. Okay. That is the number one thing. All right, so that's that for the markets. And what I'm going to point out is a couple of tickers right now that have my attention the most. But real quick, let me show you RTY. I'm going to show you the weekly time frame and not the daily. Here you go. So here you go. Right now we got rejected pretty heavily from that weekly level, as you guys can see. So anything over 21, we're gonna stay bullish. Anything below 21, it's gonna be a slightly bearish. Okay, the RTY is and does have characteristics for trading sideways, and it respects its supply and demands. Okay, so if you guys enter puts and this market starts coming down in the next couple of days and everything looks bearish, RTY is going to be a good one to drive it back down. Once it comes back down, drive it back inside, and it does that. It's a range ticker, so take full advantage. But again, don't get scared because we get one little pullback on a red day. What this is actually doing, it's giving you the opportunity to come in here and buy this dip. Until things change, we're still buying dips, guys, okay? But be aware, like I said, if that rug pull comes, you already know what's going to be playing out. You know it's going to be playing at head and shoulders. You know that there's going to be a lot of rejection from supplies, and the market is just going to, you know, give a nice pullback for some great dip buy opportunities later on. Okay, so that's that for the RTY. Let me show you the next ticker that I actually have in mind on the 4 hour. What I like about this is that we've been trending very nice. Okay, now there is a lot of FANG stocks that are trending. So Facebook, Microsoft, Apple, and Amazon have been trending the past, you know, few weeks. And I think Netflix is catching steam right now, and we'll get to that. But I think Google right now has the better setup right now for another leg up if that were to continue. And I really want to catch this move all the way to this 3K. Call me crazy, but it has potential to do that. Some of you guys may call it a little gap right here, which again, I'm not a fan of those gaps, but it definitely can be a potential. So this staircase pattern, the Google spreads have been amazing. I've traded this about, you know, 3 times in the past few weeks, and it's been amazing. I was actually able to catch this run here, and then the swing from here to there. So that was pretty amazing. So I'm ready to catch it again. Okay. What I want to do is here for Google, because it's a staircase pattern, I legit just want to enter right here. This is what I want to hold. So my entry over 28.50 is gonna rock all the way to here. That's what I want to see. So what I'm doing is I'm showing you guys a potential pattern here for a staircase that can hit that level. So technically you want to look for that 29, 28.75 and 28.90 area. So for Google, you just want to use some whole numbers, and the spreads are heavy, so you got to be careful. Okay. So that's the thing with Google. I think it has a lot of potential, and let's look at a couple more, right? So let's look at PayPal. PayPal is one of those tickers that I believe has a lot of value still and has great opportunity to the upside. And it's been amazing. I've been day trading and swing trading this thing like no other. And this is going to be on my watch list every single day until this thing hits, what is this? All-time high of 310. That's my goal. Okay, whether it's your goal or not, it doesn't matter because that's my goal. And I want to catch every single move on the way up. If I can't catch every single move, I want to get the best that I can. And I have all year for this until it hits all-time high. So if there is one ticker that I'm focusing on for the rest of the year, this is it, guys. I like PayPal as a company, and I believe that they can do great things. And the future in itself, like I said, 5 years from now, I think they're going to be great. Everybody uses PayPal. It's a payment system. I use it myself, so they charge me taxes, so I'm going to get the most out of that I can from this company and this stock. So right now, what this is doing, nice demand. Here's your run up, here's your base. So basically we kind of created this little squeeze down here, which is kind of awesome. And right now what it's doing is retesting from the top, okay? So as long as we can stay over 119, 120, right here, this piece right here. Okay, as long as we can trade in here, I think this thing can have a lot more room to the top side of 130. 130 is going to be my first target once we get to this 130. Then it's going to be a whole gap fill right here from the earnings, which is pretty amazing, and a lot of room to the upside, which is going to be 155, 160, 162, 170. So it's a lot of room, guys, for this to keep on trending up. So I am going to continue to hold my lead position. I have a September 130 call, which I got in right here at this bottom, and I've been in this ever since. So PayPal is a great ticker, guys. Keep note of it and don't miss out, right? Okay. The other one is going to be AMD. I know a lot of you guys are watching AMD. What I want to point out again is this amazing dip buy that can potentially be bought up in the next couple of days. So if this just holds anywhere above 119 and 120, I think this is a good entry point for this position to go long. If we hold the staircase pattern, the sentiment in the market would have to remain bullish. If that were the case and that continues, then I think AMD can come and push to this 127.50 and 127, and then all the way up to this 132 and 133. So looking for those staircase patterns, guys, to continue keep on trending. And I'm looking for the reversals in ARC as well. I think ARC is amazing, and what it's doing, it has a lot of room to the upside. And it's the same thing in the same case and scenario here with ARC. That's retesting now, a nice little rejection from the top, and that's okay. So again, if this thing can hold anywhere above 67.50 to 68, this thing is going to just be breaking up and creating new highs again. Kathy Woods, I hope she bought the bottom. I hope she loaded up on some more shares because this is definitely something that I pointed out in the past video too, where I pointed out here, I said buy here and then ride this thing all the way to the top, right? So what it is, let me show you the pattern. Here's your rally, here's your base, here's your rally, here's your retest, and then we're looking for that staircase pattern. Okay, so a lot of tickers still right now, guys, we're still looking for those staircase patterns to be validated, and we're looking forward to a lot more tickers to recover and continue to reverse, right? The next one is going to be BA. Some of you guys already have BA on your watch list. I know a lot of you guys are, watching this and have this nice little trend line, and that's all fine. And I think right now it's reclaiming these levels again. So not so much worried about the weekly time frame, but I'm looking at this 4-hour time frame, and what it's creating here, creating a nice little demand right here, and it's pushing up today. And I actually swung it yesterday into today, and I'm still in a contract. I took a lot of profits on this, which was amazing. I actually entered here, okay, and I bought some weekly contracts, took profit right here as a trail stop, and I sold at the top. And then what happened here when this started riding back up, I added more contracts here at this 194, and then rode it back up in here, and I scaled out of my position. So 2 different positions plus the third one with the swing, holding the swing for free, and then just riding this thing to the top is gonna giving me a free swing trade. Okay, so I have a 195 call for April 14th that I'm just going to be hanging out with, and I think BA can hit this level of 204. Now it doesn't have to hit in the next couple of days. It would definitely be nice if it did, but again, I'm kind of just looking for something to do something like this. Again, guys, I'm looking for staircase patterns. These patterns are all validated still. There's nothing that's changing about them. But I am fully aware that a rug pull can happen at any time. There may be some crazy news that pops up, and somebody says that the war is getting worse, that the inflation just went crazy, and the interest rate hikes are affecting stocks and all this stuff. I'm fully aware, guys. Again, I'm not biased on it because the stock is showing more green than red. So if you're showing more green than red, I'd rather go with the buyers than go with the sellers who are getting biased based on the news and based on the economy. I'm looking for something that's going green. And until that changes and I'm proven wrong, then I will stop out and then go ahead and switch gears, and then I'll be on the put side. Until then, guys, be aware, again, like I said, that a potential pattern can be created, but a base can be created. If a base gets created, it's going to be amazing. And once we break these highs, it's just going to continue on higher. So we're going to be looking for all-time highs. And it sounds crazy to say that, but that's kind of a good deal breaker for a lot of bears out there. And it's just everything's so bullish, guys. Okay. So I'm gonna leave you guys with that. Hopefully this breakdown kind of helps you guys understand what the market is doing and what to look forward to in the next couple of weeks, maybe potentially. And just stay aware, stay disciplined, stay structured, follow your rules, respect your stop losses. Do not bag hold something that you shouldn't. If you're feeling uncomfortable in the position while it's red, your automatic reaction should, be getting out of that position, right? And like I said, build on something that has value, guys. Don't build on something that's at an all-time high. Don't build on something that's a meme stock. And definitely do not over position yourself. Make sure you are managing your risk properly by hedging yourself with some SPY puts, overnights, if you're in calls, or vice versa, whatever it is that you're doing. But please, just be careful in these markets, guys. These markets have been amazing, and don't get caught off guard. Just be aware. All right. So I'll leave you guys with that. Hopefully the market breakdown helps you guys, and I'll see you guys next week. Y'all guys have a good one.